I think the market is stalling because following the initial bout of volatility from the end of July until mid-August, we did see a significant correction since the lows. And let's not forget that for a significant part of the sort of the broader market area, it is still a holiday season. It is still August. Certainly Europe is still off. The UK is still off. The US is coming back. So it is a period of relatively lower liquidity than normal. Things will start to normalize from the following week after Labor Day, when people also come back in the US. So partly to do with lower liquidity, less presence in the market. You did mention, of course, we've got some uncertainty in terms of the earnings of NVIDIA coming through. We want to see the PCE. We also want to see what the unemployment rate is, which is the key economic indicator, as Kaplan just mentioned now. So there are a number of factors following this recent appreciation and correction to see what happens. So some stability until we see some clearer picture for the next few months.
San Francisco Fed President Mary Daly just overnight in an interview saying that she sees a 25 basis point cut in September. You're in that camp and you see another one in November, but that's it in your view. But that's not enough for the markets at the moment, given the current pricing. So what happens when the market doesn't get to 100 basis points cut?
Well, I agree that our expectations has been very different from the markets. At the end of last year, the markets were expecting a cut of 150 to 175 basis points during 2024, and for the Fed to start in March. Our view was that the Fed does not need to cut by 150, 175 basis points in 24 because inflation is not going down to 0%, and the unemployment rate is not going to skyrocket higher. So we didn't see the reason for that. And also, we didn't see why the Fed should start cutting rates as early as March. So now, as you very kindly mentioned, we do expect 25 basis points in September. I think it's prudent. We've seen the unemployment rate gradually rise, and we do know that once a trend in unemployment rises, it does tend to accentuate. So we see unemployment continuing to rise, albeit gradually. 25 basis points to ease some of those tensions and manage expectations, and another 25 basis points after the elections. Now, if the unemployment rate starts to increase slightly more aggressively, and we see the weakness from the underlying level one sectors, such as manufacturing, residential construction, which preempt recessions a little bit closer, then potentially the Fed may do 50 later on, or even do two sets of 25s later on after the elections. But we do not see much more. We do not see any sort of increased probability of a recession or a hard recession.